So, can a new Fed chair save us? As I record this, it's May 15th, and it's Kevin Warsh's first day on the job. Listen, he was my guy. He was my pick from the beginning. I want to tell you why, and I'm excited that he did get in. It was a close margin, but he's in. But again, will a new Fed chair be enough to save us? Look, the outlook for this year, for 2026, has shifted dramatically in the face of Middle Eastern conflicts, right? The price of oil impacts everything. As prices rise, inflation comes back into the picture. Inflation is the arch enemy of bonds. Bonds control mortgage rates. So here we are, we're stuck. You've got sellers, you've got buyers, you've got people in the market hoping that there's some relief coming, but will it actually be on its way? Now, I will say Kevin Warsh has his job cut out for him, but I have confidence. A lot of the preliminary interviews, a lot of what you can find out there of him having conversations about the Fed, I feel very confident in his ability to lead. Now, what the Fed's going to do, raising rates, lowering rates, keeping them the same, again, it's going to have a minimal impact on where mortgage rates head. But I believe he'll be able to steward the conversation well. I believe he'll be able to control the rhetoric that may help us, fingers crossed, bring some relief to the interest rate market because I know that will help, right? That will shake some buyers loose. That will bring affordability across the board. Because the other option is that we see relief in terms of home prices coming down. And I think maybe we've seen home prices moderate. We've seen rates maybe not be as volatile. So there's a silver lining for sure. As I record this, today is not a great day for mortgage rates. But again, I think there's a silver lining. I think there's hope for buyers. So here's what Kevin Warsh's position typically is. One is, hey, look, and I think as a big picture, the inflation metric that the Fed set is made up. That's a completely different story for a different day. It came out of a closed door meeting as a 2% target. That target's made up. Consumers care about the Fed controlling inflation because they feel it in their pocketbooks, but they don't understand that what the Fed is looking at isn't the price of cereal that they're paying that is now for some reason $8 a box. Okay. Consumers feel it. They think they're fighting the same battle, but it's not. And so the Fed sets an irrelevant target of 2%. And so then the markets react when inflation doesn't align with it. So what Kevin Warsh is saying, and what I believe we'll see some relief is, hey, we need better tools. The Fed is using tools from 30, 40 years ago to measure the economy. It doesn't capture people who are working in this gig economy, right? It's completely changed. The job market's completely changed. And it's very difficult to use the old metrics to get a reading on what's actually happening in the economy, where it's inflation, jobs, etc. So better data, newer systems, and then if he can help control the conversation around inflation, maybe steer us away from a target that may or may not be unattainable. If you want to search the 2% target, it's very interesting. The conversations around the Fed's 2% target. Alan Greenspan was there. He made this offhand comment that, hey, they pressed him for target. He said 2%. He said, if that number gets out of this room, it will be problematic. And here we are almost 20 years later. So Google that. It's really interesting to listen and kind of look through that conversation. I digress. Kevin Warsh's position that we have the opportunity with AI to bring efficiencies across every segment or sector of the economy. That's going to, in turn, bring inflation down. So that he feels like the Fed will have the ability to cut while inflation may be higher. So that rhetoric combined with just his leadership and understanding and updating methodology should help us. Is it going to help us in the long term? Are we going to see that in 2026? Probably not. We have to work through some of the uncertainties we've seen, especially with the Iran conflict. But his leadership, in my opinion, will be the leadership that we need to right the ship to help us cruise out of the post-pandemic era in a healthy way and hopefully bring some relief for homebuyers. Is it going to be a 3% interest rate? No. Is it going to be a rate that's maybe closer to 5? Hopefully. Our new normal is not going to look like the old normal, but it should bring some affordability and hope it brings a little bit more opportunity to this housing market. So stay prepared, do your research, stay in front of your buyers, educate them. It's going to be a volatile summer. So work with people that you trust, lock your rate when you can, stay safe out there, and thumbs up for Kevin Warsh.